What's going on, everybody? This is Jordan with Conquer Trading and Investing, and we're going to take a look today. We're going to take a look today at all three indexes on the weekly time frame. We're going to step back for a moment, and then we're going to take a look at some interesting data and see what we can put together. I want to start off here with the NASDAQ, which went on to make new all-time highs on Friday. First of all, look at this, another relentless week, starting basically at the lows and pushing all week during this risk-on week to go ahead and take out the highs. It took out the all-time highs on Friday. Now, it didn't close above them, but it did take them out, and that's pretty nice price action to watch. Let's look over here at the Dow. You could see that also this had an incredible week. It's not closing at or near the highs over here. We'll talk about that in a moment, but you could see that it had this beautiful relentless week. Look at it on this chart over here. You could see that we opened up with what was the worst social unrest in 50 years, and the markets didn't care at all week long. It was risk on, and then look at the end of the week. Look at that euphoric stage over here. We'll take a look at all of that in just a moment. I also want to briefly look over here at the S&P 500. You're looking at the SPX, and you can see also, again, all three indices rising strongly. You can see the resistance right now that we're coming up to here on the S&P 500. Now, why I point that out is not because I expect that it's going to roll over or anything like that. Why I point that out, though, is because we are looking at the S&P and the Dow. We're looking at them also into resistance. You see the resistance right over there. Actually, you can see the resistance beautifully. Here's the top of the resistance. Follow my mouse to where this bar spiked down into, same exact level. And that's where we ran into the top over there. Now, could the S&P and the Dow follow, break above this little resistance there in front of, and then go on to push new all-time highs, as is the NASDAQ? Now, a lot of traders, that's what they believe is going to happen. And that could possibly happen for sure. Look at the NASDAQ over here. Look at that. That doesn't look like it's stopping anytime soon. Now, there is one other thing, or there's a few other things to keep in mind over here. We're going to talk about all of them as we get into this video together right now. I want to also take a look over here. On Friday, we had the non-farm payrolls, and we had a huge, enormous beat, adding 2.5 million jobs. Now, a lot of traders are skeptical of those numbers, and they are thinking that they just don't add up, and now we are looking like China putting out fake numbers. Now, I don't know whether that's the case or not, but over here you have the number of unemployed on temporary layoff, and you could see them returning to work. I do have friends and family over the last couple of weeks that have been in this situation where they were never actually laid off. They were furloughed, and now they've returned to work. So is this possibly adding to those numbers? Well, to be honest, I don't know. Julio shared this morning with me, and this is the report that was published yesterday after the non-farm payrolls numbers from the U.S. Bureau of Labor Statistics. And you can see that they go on to say, come down over here with me, when they said that there are some miscalculations, some errors in the reporting, and they need to address that. And they said that they will continue to investigate the reasons why the miscalculations, errors persist. In addition, we're making further changes prior to the June collection. What they're saying is that the numbers are wrong. They don't know why they're wrong. They need to figure out what's going on, and that they're going to make some changes this month as they collect the data, which means that the July non-farm payrolls, first Friday of the month, is an event that we're going to need to focus on. It could rock the markets either way. We don't know if they're miscalculating if all the job losses were a miscalculation. I'm not saying that's the case at all. Maybe this was a miscalculation, and maybe we're going to see bigger numbers to the upside, or maybe this was an enormous miscalculation, and we're going to see again a really strong loss of jobs. We'll see. We'll put it all together as it occurs. But I do want to talk about the current market right now. I do want to talk about this tweet which says that I just spent the day with a friend who has zero investing experience, and he says he's up 60% on airline stocks with 50% of his net worth. Claims this Wall Street stuff is easy and he should just quit his good medical job to day trade. Now, Warren Buffett, everyone knows, right? He sold the bottom on the airline stocks. Did he make a mistake? You know what? He actually didn't make a mistake, because what Warren is doing, Warren doesn't have 50% of his net worth in an airline stock. Warren is actually looking to go ahead and beat the market over a long period of time. Warren's not really concerned what happened over the last few weeks. You know, he's not at all. What he was doing was he was being risk averse. He was being risk adverse by going ahead and cutting that position at the right time. Now, he didn't expect the Federal Reserve would come in there. He didn't expect the Fed to come in so quickly and so big, which they did. Now other young millennials, young people who haven't experienced, I say millennials because they haven't experienced a bear market. They haven't in their lifetime experienced a bear market. Was this crisis a bear market? We'll look at that in a moment. But they haven't. We've been in a bull market phase for the last 12 years. They just don't know what a bear market is. And bear markets could be ruthless. And you could have enormous rallies within a bear market. Now, are we looking at a bear market rally? Well, the NASDAQ just hit new all-time highs, so you can't call that a bear market rally. There's no way you could do that whatsoever, right? Now, bear markets normally persist for a couple of months, right? This was about a month. The crisis went on for about 4 or 5 weeks. Now, the damage done was pretty severe that I would call it the shortest bear market in history, even though it doesn't fit all the definitions, perhaps, of a bear market. But it does contextually other ways. Now, this is looking at the indices. We're looking at the indices here. Is the economy still in recession? Yes. Is the economy still in contraction? Yes. Has the economy put in a V-shaped recovery? No. No. This is a V shape you're looking at right here on the NASDAQ. That's a V. That's a V all day long. But the economy has not recovered, or is even close to it. We're going to see what happens. I want to take a look at another chart over here, though. This is giving you a little bit of context. This is the current rally of the S&P 500 versus the greatest bear market rallies of all times. Now, again, I just looked at this, and I'm saying the NASDAQ has recovered fully. It's not a bear market rally that we're looking at in the NASDAQ. Is it possible that the S&P or the Dow doesn't go on to make new all-time highs? Is it concerning that the NASDAQ is making new all-time highs and that the Dow and S&P are lagging behind it? Perhaps a lot of people think that soon we're going to be making new all-time highs on all three indices. We'll take a look at that in a second. But look over here. This is the big one, 1929 in yellow, that lasted 147 days. By the way, by the time that rolled over, the initial 1929 moved down, and then the bear market rally, that went on to what would leave us right around September of October, the fall of this year, when it rolled over. So we'll see. We're not out of the woods yet is all I'm really getting at over here. And you can see 1938, the green one, that went on for 223 days. And then in 1974, that went on for 285 days. Yes, I know the Fed is expanding its balance sheet, and the Fed won't let the market drop because the Fed can't let the market drop, but the Fed could only control so many different things. And if we start seeing some solvency issues, we're going to see the credit markets really, really suffer, and we're going to see that global liquidity start crashing, and that's what the markets are following. The markets are following not the expansion of the Fed's balance sheet. It's following the global liquidity. Yes, the expansion of the Fed's balance sheet helped. It helped set global liquidity at ease so that it can continue expanding and rising. But that could come in jeopardy again. We have to watch out for it. Watch over here, taking a look at the Dow over here. So again, you had the NASDAQ making new all-time highs on Friday, not closing above, but making them. And then you have the S&P and the Dow both lagging. Now, once and if all three of these indices start making new all-time highs together, that's Dow theory. That's a really positive sign that we should see a big continuation. When you have one index make a new all-time high and the others do not and then roll over, that's actually a very bearish sign. So we'll see what happens. Right now, we don't have a plan going into Monday. We're gonna let all this euphoria settle for a moment over here. We're actually gonna go live together at 9 a.m. for a live stream, a half hour before the markets open on Monday. We're gonna take a look at what's happened overnight. We're gonna settle in, prepare ourselves. We're gonna look at all the charts across the market and get a feel for what's going on and make sure that we're in the flow of the market so we can put together another great week. I hope to see you then. Have a great day, everyone.